Welcome back to the Deep Dive. Today we're jumping into Textron, ticker TXT, and their Q3 2025 earnings call.
Yeah, and this one was, well, is interesting. A real head-scratcher in some ways.
Definitely. You had this company hitting it out of the park on profits, on cash, but the market just punished them, all because of the top line.
Exactly. It's a classic case of conflicting signals, you know?
Yeah.
Management did great on costs, margins, getting cash back to shareholders, but that revenue number, it just spooked investors.
So our job today is to really unpack that. Was the market reaction fair? Or is there something more going on under the hood here?
Let's find out. We need to look past that immediate pullback.
Okay, let's hit the numbers that caused all the fuss. Bottom line, first, profitability looked, well, fantastic.
It really did. Adjusted EPS came in at $1.55. The street was looking for something like $1.47, and so a solid beat there.
Shows good operational control.
Absolutely. And segment profit, which really tells you how the core businesses are doing that, was up 26% year over year, $357 million. Strong stuff.
But then there's the revenue, the source of the anxiety.
Right. $3.6 billion. And consensus was, what, $3.67 billion, maybe up to $3.74 billion. So, yeah, it missed.
Even though it's still up 5% compared to last year?
Yeah, positive growth, but that miss against expectations. That seemed to be the whole story for the market on day one. Disappointing.
Okay, so management points to cash flow. They generated $281 million in manufacturing cash flow, pre-pension. That's almost double the $147 million from Q3 last year. Is that the real story or just spin?
No, I don't think it's spin. That cash number is absolutely critical. It's real.
Right.
And when you generate that kind of cash, it fuels things like buybacks.
And they were aggressive there too, weren't they?
Oh, yeah. $206 million returned just in Q3. That brings the total for the year so far to $635 million. Significant.
So strong profits, strong cash, good buybacks. But the market focused on that revenue miss velocity, as you said.
It seems like it. Sometimes momentum or perceived momentum overrides the underlying strength, at least initially.
So given that revenue wobble, maybe the most telling thing is that management didn't budge on guidance.
Exactly. They stood firm, reaffirmed the full-year outlook.
That's a pretty strong signal of confidence, isn't it?
It really is. Keeping that adjusted EPS range at $6 to $6.20 and the cash flow target at $900 million to $1 billion, it tells you they have really high confidence in Q4.
Why Q4 specifically?
Well, Textron, especially the aviation side, it's very seasonal. Q4 is always the big delivery quarter where a lot of the margin gets captured. So reaffirming means they expect those planes to go out the door. They know what's coming.
Okay, makes sense. Now, another big piece of news was the leadership transition. Scott Donnelly moving to executive chair.
And Lisa Atherton stepping up from Bell to become president and CEO in January 2026.
How did they position that? Smooth handover or?
They definitely framed it as a smooth, planned succession. Long time in the making. The key message was stability.
And they stressed she'll be running the show.
Yes, explicitly. Donnelly assisting with the transition, but Atherton in charge. And her background is really interesting here. She ran systems, now Bell. She's right in the thick of that big defense push, especially MV-75.
Good point. Let's pivot to Bell then, because that seems to be where the market's conflict really lives. Huge military potential versus some commercial weakness.
Yeah, Bell's a perfect example of the divergence. Revenue was up 10% to $1.03 billion. Good number. But it was all driven by military volume.
Specifically the MV-75 program, the Army's FLRAA.
That's the big one. They hit a major milestone there, over 90% engineering release. That unlocks more fabrication work. Wings in Amarillo, fuselage in Wichita, it's ramping up.
And that drove the backlog way up.
Massively. Bell's backlog jumped $1.3 billion in the quarter. It's now $8.2 billion. That's almost entirely the MV-75 prototype testing and evaluation award flowing through. Huge number.
Okay, but here's the catch the market saw. Despite all that military strength, Bell's actual profit went down.
Right. Segment profit dipped by $6 million compared to last year, and that's where the commercial side bites.
Fewer helicopter deliveries.
Significantly fewer. They delivered only 30 commercial helicopters this quarter compared to 44 in the same quarter last year. That's a steep drop.
So the market fixated on that cyclical commercial dip, even with the record defense backlog building.
Precisely. Looking at today's commercial softness rather than tomorrow's huge defense ramp. It's like a classic short-term versus long-term view conflict.
Now, something analysts always dig into with big defense programs. Fixed price risk. especially on something massive like MV-75. Did management address that?
They did, and quite directly. They emphasized that the main development phase is largely cost plus. So the government takes on most of the cost overrun risk during development.
Okay, but what about the first production units, the LRIP phase?
Those are fixed price, but management downplayed the risk there. They pointed out that the first LRIP unit is basically like serial number 10.
Serial number 10. How does that work?
Well, you had the original V-280 demonstrator, then 6 EMD aircraft, then 2 test aircraft. So by the time they get to LRIP-1, it's not really a brand new untested machine. They've got a lot of flight hours and learning under their belt already.
Okay, so less risk than starting a fixed price program from scratch.
That's the argument, and it seems pretty reasonable. Much more manageable risk profile.
Got it. Let's move over to Textron Systems. Also saw some really strong backlog growth there.
Yeah, another bright spot on the backlog front. Systems added $980 million, bringing their total to $3.2 billion.
What's driving that?
New contracts. They mentioned ATAC, that's their adversary air training program, plus the ship-to-shore connector for the Navy, and land vehicle work, including support for Ukraine.
Management called it an inflection point for systems, right? After being kind of flat for a while.
They did. They sound pretty bullish that this marks a return to growth, driven by those key programs.
And segment profit was up $13 million. Is that all organic growth?
Not entirely. There's a little asterisk there. Part of that profit increase came from a one-time gain from ending a vendor contract early.
Okay, so something to keep in mind. Underlying strength seems real, but maybe not quite as strong as the headline profit numbers suggest.
Exactly. And they're also tucking eAviation, like the NUVA 300 drone, under systems now, trying to leverage that defense market access. Systems really needs to prove out that inflection point claim now with sustained revenue.
Okay, let's talk about the biggest piece, Textron Aviation. Still the bedrock.
Absolutely. Revenue there was up a healthy 10% to $1.48 billion, and that drove a nice $51 million increase in segment profit. Solid performance.
Power deliveries, jets, and turboprops.
Look good. 42 jets delivered, 39 turboprops. That's up from 41 jets and only 25 turboprops last year. So good volume increase, especially on the turboprop side.
And the aftermarket, how's that holding up?
Still strong, up 5% revenue growth. That tells you the existing fleet of planes out there is flying a lot, generating demand for parts and service. Healthy sign.
And they seem to have some new products coming online too, catalysts for future growth.
Definitely. They mentioned getting certifications for the CJ3 Gen 2, M2, Gen 2 auto throttles. And the big one, the Citation Ascend, just debuted at the NBA show. They expect first deliveries this quarter.
That Ascend is a key new product for them, isn't it?
Huge. A major refresh and a core part of their market. Plus, they highlighted putting Starlink connectivity across, 14 Citation models now? That's a big deal for business jet customers. Technology matters.
So if aviation is doing well, deliveries are up, aftermarket is strong, what's holding them back from doing even more is demand softening.
Management says no. They were pretty clear. Demand is strong across the portfolio. Bookings are looking good for a 1-to-1 book-to-bill this year.
So it's not demand.
It's capacity. Still the supply chain.
Yeah.
They said it's improving, getting better, but it's still the primary constraint on delivering more aircraft, not a lack of orders.
Which brings us right back to the start. Why the big stock drop? Profits good, cash good, guidance held, massive defense backlog, aviation demand solid. Why the 3.8% hit on earnings day?
It really boils down to that show me story, I think. The market just zeroed in on the headline revenue miss and maybe more visibly, that sharp drop in Bell's commercial helicopter deliveries.
And the comparison to the rest of the sector probably doesn't help either.
Not at all. You look at the broader aerospace and defense ETF, ITA, it's up, over 44% in the last year. Textron stock is basically flat, maybe slightly down over that same period.
Wow, that's a huge performance gap.
It is. It puts enormous pressure on Textron to prove they can deliver consistent growth and close that credibility gap with investors and compared to peers.
So looking ahead, what are the key things you're watching for next quarter?
Okay, number one, execution in aviation. Can they hit that Q4 delivery ramp and capture the margins they expect? That's crucial for hitting the full year guidance.
Right, number two.
The leadership transition needs to look and feel smooth. Any hint of disruption around Lisa Atherton taking over could definitely rattle the stock. Stability is key.
And third.
Program milestones, continued progress on the MV-75 prototypes, and critically, getting those first Citation Ascend deliveries out the door successfully this quarter. Hitting those milestones builds confidence.
Okay, let's shift gears now to our segment where we toss around some ideas. Strictly for discussion, remember, folks.
Yeah.
This is not financial advice segment.
All right, so our core idea here is that Textron is just, well, fundamentally mispriced right now.
Mispriced how?
The market is penalizing it way too much for that temporary commercial helicopter weakness and the, frankly, minor revenue miss. It's masking this incredibly powerful defense growth engine with MV-75 and the underlying strength in bizjet pricing.
So basically, short-term noise obscuring long-term value.
Exactly. The market's focused on the static, ignoring the dynamics of that huge, long-duration backlog starting to convert.
Okay, so how would you structure a trade idea around that thesis?
Well, thinking provocatively, maybe a pair trade, betting on Textron's defense side getting properly valued.
Interesting. Go on.
You'd go long TXG. The bet is that Lisa Atherton, with her deep defense background, successfully executes on the MV-75 ramp, and the market starts valuing Textron more like its pure-play defense peers, especially if aviation nails those Q4 deliveries, including the Ascend.
Makes sense. And the other side of the pair, the hedge.
To hedge out some of that market nervousness about the top line, the commercial stuff, broader economic jitters, maybe short a basket of smaller industrial stocks.
Which one specifically?
Ones that are, high beta, really exposed to global economic cycles, maybe specifically companies tied to discretionary commercial equipment, perhaps even helicopter suppliers if you can find them, hedging that cyclical exposure.
So the core bet is that the certainty and scale of the military backlog provide a stronger foundation than the commercial cyclicality provides a drag.
That's the thesis. Defense ramp overrides industrial cyclicality in this case. Long duration visibility wins out.
Okay, provocative indeed. So let's wrap this up. Textron Q3, strong profit, great cash flow, huge defense wins, solid aviation aftermarket.
But the market hammered it on the revenue miss and the Bell commercial softness.
The real story going forward then isn't just the size of that backlog, which is massive. $7.7 billion in aviation, $8.2 billion at Bell.
Right. The real story is execution. How quickly and how smoothly can the new CEO turn that mountain of backlog into actual, consistent revenue growth?
That's what will close that valuation gap.
If they can do it, yes. Flawless execution is the name of the game for the next 12 months.
Great deep dive. And remember, as always, this is just our analysis to get you thinking. It's not financial advice. Definitely do your own homework.
Absolutely. Thanks for tuning in.